President Trump's tax and spending bill expected to add trillions to the budget deficit over the next decade. Leslie Picker joins us now with the CNBC special report on the potential economic fallout. Leslie.
Hey, Melissa. It's likely if there is a fiscal crisis, the first place it pops up is the markets. I asked Bridgewater founder Ray Dalio before the latest tax and spending plan was passed what he thinks the likelihood is that America experiences a crisis related to its deficit or debt levels.
I think that there's more than a 50% chance that in 3 years, give or take a year or two, that we will experience a trauma if we don't deal with this well.
Over the weekend, Dalio posted that the bill is expected to boost the debt in 10 years and warned that unless this path is soon rectified, big, painful disruptions will likely occur. PIMCO CIO Dan Ivison, a bit more sanguine when we spoke a few months ago. He said the risk that the market loses confidence in U.S. assets because of its debt load remains low. The firm had been cutting exposure to long-dated U.S. Treasurys, diversifying towards sovereign debt that they see as having more prudent fiscal policy.
If we don't see signs of attempting to get debt under control, those probabilities of a more crisis level type situation occurring will steadily go higher with time. And then again, when people worry about these tail scenarios, including PIMCO, we want to get paid a little bit more to combat against those types of risks.
Still, the bond vigilantes have been dormant lately, something Edgar Denny has recently attributed to the prospect that a new Fed chair will lower rates and refinance the long end of the curve. To learn more, check out our special report, America's Deficit Reckoning, at cnbc.com/deficit reckoning, or by following and listening to the Fast Money podcast. Mel.
Leslie, thank you. Leslie Picker. Well, one of the investors profiled in The Big Short is not worried about the size of the budget deficit. Steve Eisman is host of the Real Eisman Playbook podcast. He's former senior portfolio manager at Neuberger Berman. He joins us here on set. Steve, you said this before. It doesn't matter. People have been railing against this for decades.
40 years.
40 years. When do you think will it
ever matter?
You know what I got to say about all this?
Well, just stop. For God's sake. You know, I'm going to say this. Maybe it's a little too obnoxious, but I can't help myself. It's just how many times I can ask you this question? People want to be me. They want to predict the end of the world, and I have a news for all of them. The position of Steve Eisman is taken. And
by an optimist. By an optimist.
Go figure. I don't know how to say this more ways. The world functions, put it this way. There's a great slogan that says, that I think really applies to politics and international affairs, which is when someone tells you who they are, believe them. But in the market, when someone tells you who they are, don't believe them and they actually do something with their money. So all of the people who are pontificating about this, what's happened to the price of this risk is the 10-year Treasury yield. And what's happened to the 10-year Treasury yield has been directionless since December of 2022. So the more important question is, given that all these people are pontificating about it, why hasn't it moved? And I think the reason is there's no alternative to Treasuries. So if there was a real alternative to Treasuries, then all of this stuff about the deficit is something that I would pay attention to. But as long as there's no alternative, there's nothing to talk about.
So if there's no alternative, well, let's put it this way. So if we don't think there's going to be a Treasury blow up, it means that generally that the equity market is just expensive. And so talk about that, because clearly you're right in terms of where we've been.
That's not something I even pay that much attention to.
Okay, so valuations don't matter.
It's not that valuations don't matter. They always matter in the long term. But, go back to when people really complained about valuations, the internet bubble. So people shorted internet stocks and got carried out. What broke the internet bubble was not valuation. What broke the internet bubble was a recession that caused some of these companies to go bankrupt and to do badly. So, look, the U.S. economy, in my view, is more dynamic than it's been in my lifetime, maybe in many lifetimes. So until there's something really bad happening, like a trade war, which is still a possibility, the valuation is not something I really pay that much attention to.
In terms of foreign investor perception of the safety of U.S. Treasuries and confidence in our assets, are you concerned at all about President Trump appointing a new Fed chair who will be perceived as some sort of a puppet, questioning the independence of the Fed, and so therefore investors lose confidence in Treasury? It might not be the deficit, it might be this.
I understand. Look, I think the institution is stronger than the person when it comes to the Fed. You know, the President of the United States cannot fire the Fed chairman. He can put someone in there, and then once that person's in there, they'll do what they want. And President Trump can complain all he wants, so there's nothing you can do about it.
Would it make a difference to you if they changed how they refinance? We saw they're going to do auctions. It's not going to change. But in the future, Besson has sort of hinted that maybe there's some significant change. If they don't do coupons anymore, would that make a difference to you? Just to all
I think the demand for Treasuries on planet Earth is pretty insatiable. It could change this, it could change that. At the end of the day, the auction will be fine.
Steve, anywhere in the equity markets that you see unusual exuberance, just something that maybe it's a concentrated trade in and around AI, or something that you'd really want to keep your eye on?
I don't see exuberance. I see something very interesting developing, which is there's a thesis out there. It's not my thesis, but that, you know, for years, hardware stocks always underperform software stocks. And the last couple of years, because of NVIDIA, it's been the reverse. But the thesis is that we are at the beginning stages of a derating of software. And the reason is that the cost of creating software because of AI is plummeting. I mean, there's something I read in an article that's called vibe software creation, which is like morons like me can create software because I say to Perplexity, write me a program for whatever, and it writes it. So I think that the software that's being created today is going to cost so much less than the incumbents that it's possible some of these incumbents will have problems. And you actually, you know, if you look at the chart of Salesforce or Adobe, you know, those charts don't look so good. And you would think in a bull market, you know, those would be go-to stocks, but they're not. And I think maybe that's what's starting to seep in. And that's a very long-term thesis. It's a very long-term derating. But if it's right, we're at the very early stages of it.
So when you look at it, if the deficit doesn't matter, because I agree with you there, the dollar doesn't matter, weakness or strength doesn't matter. Treasuries don't matter. That doesn't sound right.
That's why I'm so happy.
Exactly, exactly. So when you look at it, for me, the market has collapsed on itself, and there's very few things that matter longer than a week. So
I don't agree with that.
So tell me what you think matters.
I think what matters is that the AI story is still in its infancy. And the reason why I say that is, what's the company with the largest market cap in the United States now? NVIDIA. It's almost $4 trillion. Its revenue grew 69% in the first quarter. It's a staggering. The largest company in the United States had revenue growth of 69%. That tells you this story is early. There's going to be a lot of appendages, and there's going to be a lot to do.
So long and strong NVIDIA still in all the AI,
and appendages.
AI trade. And the appendages.
I mean, there are appendages, for example, the need for electrical power is insatiable. Sure. So that's more of an industrial, certain industrial company story, which I find very interesting, but it's related. That's
your highest conviction trade right now?
Yeah.
Yeah. Steve, always great to see you. Steve Eisman. Coming up, a biotech breakout. It's what Mizuho's Jared Hull says could be on the horizon. The numbers behind a huge surge in bullish sentiment next. Plus, a casino crap out for MGM, why Goldman Sachs is cashing out of this gaming name right after this. Stay tuned.